From what I can tell, there's hardly any retail demand and massive industrial. Is that
Yeah,
what you're
it's
seeing, and why is that?
yeah, it's true. I mean, it's the complete opposite in the equity market, which is actually, I think, stronger, makes a stronger statement. In the equity market, you have massive insider selling, and the big money, the insiders over the last 4 weeks, the institutional have sold 4.2 billion last week. Over the last 4 weeks, 2 billion per week, as the insiders are or excuse me, as the retail mom and pop are at the largest amount of stock exposure ever in history. They're all in on stocks, and that says something, I think, about where the direction of the stock market may be going. The
Yeah.
insiders know the scoop. Well, look at the same thing in reverse with the metals market, the biggest money in the world, the central banks, the sovereign wealth funds, the family offices, they are draining the world's exchanges, as you know, standing for delivery. The largest delivery in the history of the Comex market, I believe, in both gold and silver, occurred in May. You can correct me if I'm wrong on that, but I'm pretty sure it did. About $8.5 billion worth of gold was delivered in May, about 4.5 in March. The biggest money in the world is accumulating gold and standing for delivery. And the odd thing about it, to your point, is that the retail investor is immersed in the risk on trade, immersed in traditional, equities and the traditional form of investing. And you have to wonder if the insiders are massively selling as the on equities as the retail investors are buying, but it's the opposite in gold and silver. Who's going to be right? And my guess is those closest to the information are right. And that to me is very telling. But yeah, you're right. The people on this side of the table in precious metals are missing out what's happening, and that's why we see the lowest premiums we've seen really in a very long time on metals. They're just it's a lack of demand on the retail side more than anything, which is very, very confusing and hard to understand when you see what's happening up there.
Yeah. Um, it's interesting because I just looked at this because I was like, I know it's been a huge year for Comex gold and silver deliveries. And I wanted to look at the juxtaposition of the money. People say, "Oh my God, the big month of March, silver was 80 million ounces. If you count the micro contract or whatever they call it, it's 82 million, and that's 2.7 billion dollars worth of silver." Now people are like, "Oh my God, that's so much silver." And I'm thinking in my head, we got two industrial or two monetary metals. There's gold and there's silver. February did 22 billion of gold deliveries. And you look at that and you're like, holy crap, that's 8-to-1 ratio. So I get all these things going in my head. One, 2.7 billion is not a lot of money in the financial world. Not a lot at all. Are people really that stupid when the big money when they look at gold and silver? We know historically gold and silver have always been monetary metals. The reason that people are thinking silver is more of an industrial metal now is because we've been conditioned to think that. The
Yeah.
price of silver has been rigged for so long, it's trading it still way below its all-time high from 1980. So that people chase price because they've been holding down the price of silver for literally 180 years, people have not gravitated towards silver. All it takes is one multi-billionaire to say, hey, this is bullshit. The price of silver should be quadruple, 10 times, 20 times, 50 times what it is today. I'm not an idiot investor. I'm going to jump in and buy what's cheap today compared to what was cheap in 1980. And the whole concept of that not hitting the retail side, to me, it baffles me, other than looking at some of the industrial side. We have the largest Comex deliveries of silver in history this year. We're going to break all records. We got the largest LBMA. The LBMA in the last 6 months has jumped from an average of 200 million ounces net transfers in 6 months ago to 340 million ounces of silver every day, every single day. At some point, you got to think, holy crap, massive amounts of physical are moving. in India just announced they had 17 million on a 17 million ounces imported on a month of May that the price didn't move. That's unheard of in India because they only buy when the price is slammed below the moving averages. So everything is just screaming to me that silver, all it takes is one spark to set off the silver literal moonshot that everybody's been begging for. And it's not going to happen on the retail side. That's small potatoes compared to what happens. We're talking hundreds of millions of ounces going to India and to China and all that. I'm of the opinion that the retail side will be chasing silver well after $50. What do
You
you
know,
think?
I'd be curious to your take on the post that Chris Marcus put out last week, and I've always admired Chris's ability to chase down the story from an investigative journalistic standpoint. He's one of the best in this space, and he was talking about the fact that when you have large short positions on Comex, that they're supposed to typically be offset with long positions in London, and he was framing it with the respect that if indeed the massive short position, the second largest ever in the history of the COMEX by the commercial banks that we see right now, if indeed it really is offset in London, where we're told they have somewhere in the neighborhood of a 250 million ounce float. If they're offset, he was saying that that means there's only 7 million ounces in London that is not encumbered, something to that extent. And if it's not offset, if it's not hedged in London, that means a bank like Bank of America, typically something like that. According to Ted Butler, when he was alive, he would have said it would be Bank of America. But that means that there are banks or a bank that are wickedly, wickedly exposed to a rise. And maybe that's why we've seen on Wednesday of last week 487 million ounces on paper traded. And on Friday, 356 million ounces. They are trying by trading 800 million ounces over 2 days to keep the price below $37 for sure. But I'm curious to your take on that. Do you think that what Chris is saying has some validity?
They definitely, especially with the added exchange for physical mechanism on the comics, that you can exchange a comics contract for a LBMA contract instead of delivering. So yes, there's definitely a lot of give and take as to. I mean, both of them are fake markets. Just everybody needs to understand. There's no way in the world that the LBMA transfers 347 million ounces per day on the comic. That's just it's such a ridiculous comment that you got to wonder, okay, we know LBMA is not an exchange, it's an association. It's not, free and open. They control the people who set the price there. The Comex, I would say 90 to 95% of all trades on both exchanges are just the same banks trading back and forth with each other, setting the price, colluding. As far as how much is left, if they are offset, it is very possible because we do see, I am seeing these days, because I've been watching Bank of America. When Ted was talking about Bank of America in the early days, I was watching the commitment or the OCC report on derivatives. And it's true. They leased or borrowed 1.2 billion ounces of physical silver from JP Morgan after JP Morgan was shut down by the Trump administration for rigging the price of silver in the past. But also, I talked to Ted many times about how much physical silver, while JP Morgan was keeping suppressing the price of silver, which they got busted for, and literally they have a felony against them. One guy's, I think, still in jail. The reality is it went to Bank of America, but then Bank of America subleased that to other players. Now, who are those other players is the question. One of them is Wells Fargo. And we've been seeing all year Wells Fargo in the non-delivery months take as much physical silver as possible. And then in the delivery month, they have to pony up that silver, meaning that they have short positions on throughout the year and maybe 2 or 3 years that they don't have the metal for. They had to pick it up in the previous months, and they're doing the same thing this month. So if we see next month that Wells Fargo is one of the big deliverers again, and Wells Fargo was not a player in silver before the whole Bank of America thing. So it's a situation where they're playing derivative games. JP Morgan leases, a massive amount of silver to Bank of America. We don't know what kind of lease it is. It could be a fair market value lease where they have to return it, or it could be a fixed purchase option lease, which is part of it because JP Morgan booked that $1 billion gain. And if you have a fixed purchase price at the end of a lease, you got to book the gain in the beginning. If you don't, it's just an operating lease, and you can stretch it out as long as you want. So there's all this. The derivative book is going crazy. I'm seeing banks pop in that we haven't seen before with huge silver deliveries. Remember, every Comex delivery bank at the time of the close of the contract was a short position that wasn't closed out. So we see who it is on the Comex. Obviously, the JP Morgan quote customer. It went from JP Morgan house account to JP Morgan customer when JP Morgan got busted. And so, that who is that is probably, subsidiaries of JP Morgan or BlackRock, and they're all working together and they're all colluding. We all know that. So I do think Chris there's something to it. There are banks that played this game with Bank of America, JP Morgan, and they're finding out that, oh shit, I gotta, they love it in the beginning because they get the silver at a cheap lease rate. They sell it and they basically have cheap capital when interest rates were up there at 5, 6, 7, 8%. Right? They
Right.
got cheap capital. They can put on a 2 year, they can run that money. They can buy treasuries. They can do anything they want because they're getting leased silver at 1% or 0%, and then they're selling it using that cash. But it all falls apart at the end when you got to pay the physical silver back. You can't just buy off a contract or close out a lease without returning the silver. So I think there's a lot to be said for that. And I think it can be seen in how much struggle these shorts are having to fulfill what is due every month on the Comex.